Today, we delve into the latest movements in the U.S. stock market, where unexpected employment data fueled both optimism and concern. Friday closed with gains despite a week marked by overall losses. The Nasdaq, initially strong, closed up 0.8% on the day but fell 1.5% for the week, breaking its 7-week winning streak. Still, it's up an impressive 21.5% year-to-date. Meanwhile, the S&P 500 rose 0.4% on Friday after a sharp start but ended the week down 1.4%, continuing a 2-week decline. Nevertheless, it has seen a 20.1% rise so far this year. The Dow Jones Industrial Average increased 0.7% on Friday but dipped 0.22% for the week. Notably, Amazon's stellar earnings and Intel's recovery contributed to the Dow's performance. The tech sector shined, with Amazon's shares soaring over 6% after robust earnings led to upward price target revisions by analysts. Intel, exceeding expectations, jumped nearly 8%. Nvidia and Microsoft also posted gains, while Apple and Tesla slid by 1.3% and 0.3%, respectively, the latter down 7.5% for the week. As we transition into November, known historically as a strong month for equities, FactSet data highlights an average 3.2% rise in the S&P 500 over the past decade. Expert Takashi Hirose anticipates early November volatility due to political uncertainties, but he predicts a recovery later in the month, aligning with typical seasonal trends. This current bull market has only gained 61% and lasted 2 years, compared to an average of 180.7% growth over 5.5 years in previous cycles. Hirose warns of challenges for semiconductor stocks as investors weigh AI expenditure pressures, despite the impressive recent performances of firms like Nvidia. Boeing shares climbed 3% after reaching a tentative deal with its union, potentially ending a 7-week strike. Meanwhile, ExxonMobil shares fell 1.5%, and Chevron reported a notable 19% drop. Supermicro faced a steep 10.5% decline due to the resignation of its auditor, igniting accounting concerns that echoed Hindenburg Research's fraud allegations from earlier this year. Hirose advises selling any stocks marred by accounting issues, emphasizing that institutional investors prioritize integrity due to fiduciary obligations. Weaker than expected employment data showed just 12,000 job gains in October, impacted by strikes and hurricanes, with potential for upward revisions. The unemployment rate edged up to 4.1%, but wages continued to rise. Economists caution against overinterpreting the data due to disrupted data collection. Amid political tension, former President Trump criticized the employment report as catastrophic, while President Biden countered, highlighting historically low average unemployment under his administration. Investors are eyeing next week's major events, the presidential election on Tuesday, where delayed results in states like Pennsylvania may prolong uncertainty, and an FOMC meeting expected to yield a 25 basis point rate cut. Powell's insights will be key, alongside earnings from notable firms like Palantir and Berkshire Hathaway. Nvidia replacing Intel in the Dow Jones Industrial Average marks a shift reflecting the rise of AI and semiconductors. With Nvidia's revenue growth and Blackwell GPU demand surging, this change underscores a transformative phase for the tech-heavy market. As November unfolds, the market's resilience will be tested against political and economic headwinds. The critical question remains: will historical patterns prevail amid unprecedented challenges?